Hey guys, how's it going? It's Andy from Magoo Investing. Happy Monday and happy February. So today is going to be the last video for a while, hopefully, where I'm talking about kind of the state of the overall stock market, because it feels like pretty much every YouTube channel, even the ones that aren't involved in the stock market, have been talking about GameStop. But over the weekend, I've been doing a lot of thinking, and I've come to the conclusion that I am getting more and more worried about the average new investor that's just gotten involved in the stock market. So in today's video, I want to talk about something that I've been thinking about when it comes to the comparisons that can be made between the extreme momentum that we've been seeing in the stock market and something that probably a lot of people have had happen to them in the past couple years. I do have to say that I'm not a licensed financial advisor, and this is not financial advice. Anything here in this video is just me giving my own opinions on the stock market, and you need to do your own research before making any investment decisions. So before people just go and automatically hit the dislike button because I'm saying, oh, these stocks are not going to be staying this high forever, just hear me out. I'm very happy that people are making a lot of money and they're kind of quote unquote sticking it to the man. I think it's fantastic. The whole point of me making this channel was to try to get people my age to get excited about investing in the stock market, because for people that have been doing their research, the longer you invest in the stock market, the more successful you're going to be, because compounding interest and time will be on your side. And so I'm so excited when I go onto the App Store and I see that Robinhood is the top free app on the App Store right now. It's so exciting. The problem is, what I've been seeing is people have been treating the GameStop, AMC, BlackBerry situation more like a pyramid scheme and a multi-level marketing scheme that maybe some girl that you went to high school with would DM you, instead of treating it like actual investments. And that's kind of got me worried. And so the idea of these pyramid schemes or the multi-level marketing schemes is that you're not buying into the actual company. You're buying your own products that you're going to be selling to other people. So that's how they get you to buy in. But when you look at these products, they're pretty much useless. You have stuff like essential oils. I've been seeing some like protein powder and caffeine stuff. But the whole idea is that it doesn't feel like you're buying into this scheme. You're buying the products so that you can be your own boss. And that's kind of the idea of it. And when I look at these stocks that are being used for the momentum plays, it's all companies that are relatively worthless when it comes to comparing them to other major stocks in the stock market. They're pretty much useless when the price of the stock actually goes down. So I've made multiple videos talking about GameStop and just kind of the problems that have been facing the company for the past year and a half, because the stock has been falling for 2+ years until this situation has happened. And the fair value that I've been seeing for GameStop has been sitting around $18 to $20. And considering we're sitting up at $200 still, there's a long way to go until we get to that point. And talking about the fair value of the company is important when we talk about the potential floor of the situation coming up. After you buy into these products, the way that people make money is by getting other people involved into this scheme, because they have to be buying products from you or the company, and they get a cut of whatever they bought. And that's kind of what we've been seeing recently. You have the early on people that got in before the short squeeze happened. That's when I made that video back in December talking about why I thought GameStop was primed for a short squeeze. Those are the people that have gotten in very early, and that was when the company was sitting around 15 to 20 bucks. And so people that got in really early are going to be making a lot of money, because now that the actual short squeeze has happened, it's all momentum-based trading. And what that means is people are going online and they're talking to other people about, this is a situation that is foolproof. We're sticking it to the man. They throw out buzzwords like short squeeze, gamma, stuff that they really don't understand, but they understand that people are making money, and the psychology of investing has really taken over. And I've talked about this past summer when I was in grad school. I was taking a psychology class, and I talked a lot about it on this channel. And it's going to be very interesting to look back on this in a couple weeks or in a couple months and kind of see some of the telltale signs that people were trading based off of emotions. And the first one that I see has to do with the FOMO, the fear of missing out, because people are posting online about how much money that they're making, and they keep saying, oh, as they say, this can't go tits up, meaning that there's no way that this goes poorly. And then people ended up buying in. And so we get these people that are going on, Discord, Reddit, Twitter, saying that this is a foolproof plan. And that's kind of similar to what we have with the girl from high school that messages you on the DMs and says, oh, you want to be your own boss. Here's how I made all this money. It's a great thing. The problem is, it's all fun and games until the first domino falls. And that's when the whales end up leaving. And so I use the term whale because the first example that we've seen so far of a momentum play that's kind of backfired a little bit has to do with Dogecoin. Dogecoin is a joke cryptocurrency that is trading for very cheap, but it has had explosive growth in the past couple weeks with the momentum plays from the online community. The crypto increased in price rapidly and then sold off, and a lot of people got burned because of that. And while this is not, a doomsday scenario, it has bounced back a little bit. there's definitely some people involved that bought at the top thinking that this is a foolproof play, and it didn't work out for them. And this is the first place that we've seen this kind of bubble bursting. Yes, it didn't burst fully, but eventually the party is going to end with these companies, because while it seems like, these normal people are in control, the psychology and emotions of trading are definitely going to take over at some point. For people that have made money, there's going to be the idea that either people are going to be really greedy and hold on for too long, or they're going to sell and try to lock in profits, and selling pressure is going to push the stock down. And since we have the limits on the amount of shares that these people are able to buy on platforms like Robinhood, it's going to make it really tough for the price to stay this high for a while. And so you have the psychology of people that are very new to the stock market not understanding the psychological toll of having a big loss can have on you. And so that's why I'm really worried for people going forward, because that's the whole reason I do research on these companies all day, to try to make people think differently about the stock market, instead of just going onto some video where some guy is pumping up a penny stock that really has no reason being this high at the point. And so eventually we're going to have a bubble popping, and it's going to be brutal, and a lot of people are going to lose money. And that's why I'm really worried for these new investors, because it's all fun and games until people start losing money. And I'm worried that if people lose money in a catastrophic way, maybe they get in close to the top, they lose 60, 70, 80%, it's not going to make them want to invest in the stock market in the future, because people have gotten this idea in their head that, they can stick it to the man, they can have these incredible returns, when in reality this is I'm not going to say once in a lifetime, because once in a lifetime happens way more than you actually think, but people think that this is an opportunity that you can't miss. And the whole point of this channel is I've been day trading, I have lost a lot of money, and it really hurt the first time you lose a lot of money. But I think losing is important, but I think losing in a correct way is a good way to learn your lesson. I lost from day trading. I thought that I was smarter than the overall stock market, and I'm sure that there's people out there right now that think that they're smarter than these major hedge funds. I was reading this book by Jim Cramer, and it talked about how these hedge funds, when they smell blood in the water, they will take out their own kind. And so there's all this discussion online that the reason that these hedge funds are doing so poorly has to do with the everyday people like you and me. In reality, there's probably some hedge funds in there that have heard that, Citron or Citadel are shorting GameStop at an incredible rate, and they're trying to make them go bankrupt. That's just kind of the way the business is set up. Anytime they smell blood in the water, they will go after them. And once these major shareholders, or whales, which are called in the cryptocurrency world, move out of the market, it's going to push the stock or crypto down significantly. So at this point right now, I'll check to see what GameStop's looking at right now. I saw it down a little bit this morning. It's down 25% today. So for any stock besides a momentum-based stock like a GameStop, this would be a huge move. But for GameStop, this is just kind of par for the course. And so eventually this is going to pop. And I'm going to be making a video on my second channel talking about how I would get started in the stock market for people that do have Robinhood downloaded and kind of want to hear my thought process of how I pick stocks. Because for people that haven't picked stocks before, there's so many options, and there's a lot of chatter online about, this is the best stock to buy right now. I think it's important to look at your own life and figure out which stocks you want to buy, and that's how I learned to invest, and I think it's probably the most effective and safest way to do it. So let me know what you thought about this whole GameStop situation, and I will see you in the next video. So thanks for watching, and I will see you then.